property taxes are the bill that never stops coming. You spend decades building your nest egg, you pay off your mortgage, you finally own your home free and clear, and then that tax notice shows up in your mailbox every single year. For most retirees, it gets worse because while your income stays fixed, those property tax bills keep climbing higher. What used to be manageable becomes a monthly stress that eats into your carefully planned retirement budget. But here's what most retirees have no idea about. Over the past 2 years, states across America have quietly passed some of the most generous property tax relief programs in history. We're talking about assessment freezes that lock your taxes forever, exemptions that just got doubled, and in several states, programs that can eliminate your property tax bill entirely or even send you refund checks for taxes you've already paid. These aren't old dusty programs that nobody uses. These are brand new laws, some signed within the last 12 months, specifically designed to protect retirees from runaway property taxes. I'm about to reveal 10 new property tax laws that every retiree needs to understand right now. From constitutional protections that can never be repealed to refund programs that actually send you money back, these changes are reshaping retirement planning across the country. Let's start with Indiana, a state that did something most others haven't dared to try. They wrote property tax protection directly into their state constitution. Your property tax in Indiana cannot exceed 1% of your home's assessed value, period. That's not a program that future politicians can vote away or defund. That's a constitutional guarantee that's locked in stone. For a home worth $200,000, that constitutional cap means your maximum property tax is $2,000 annually, no matter what. But Indiana doesn't stop there. Once you turn 65, additional deductions stack on top of that protection. The over 65 deduction and supplemental senior deductions mean qualifying retirees often pay well below that 1% cap. Indiana essentially built a ceiling and then lowered the floor even further for seniors. That constitutional protection is powerful, but South Carolina took a completely different approach that might be even better. When you turn 65 in South Carolina, two things happen simultaneously that create incredible savings. First, the homestead exemption kicks in automatically, making the first $50,000 of your home's value completely exempt from property tax. There's no income limit to worry about, just turn 65 and apply. Second, and this is where it gets really interesting, your property assessment freezes at whatever value it was when you qualified. The real estate market can boom, your neighbor's assessments can double, but yours stays locked exactly where it was. The combination of $50,000 exempt plus a frozen assessment means South Carolina retirees are protected from property tax increases from every direction. Tennessee went even further than South Carolina's freeze. While South Carolina freezes your assessment, Tennessee freezes your actual tax bill, the dollar amount you pay. Here's why that difference matters tremendously. In South Carolina, if your local tax rates increase, your bill can still go up even with a frozen assessment. Tennessee freezes the actual dollar amount on your statement. Whatever you paid the year you turned 65 becomes your property tax forever. Think about what that means over 20 years of retirement. While your neighbors see their bills climb 3 to 5% annually, yours never changes. That's potentially $25,000 or more in savings compared to what you would have paid without the freeze. Tennessee essentially created a time machine for your property taxes, locking them at 65-year-old rates forever. These freezes are incredible, but our next group of states took a different strategy. Instead of freezing what you pay, they dramatically expanded how much of your home's value is completely exempt from taxes. Florida has always been retirement central, and their property tax benefits are a huge reason why. But Florida just made those benefits significantly better. Every Florida homeowner gets a $50,000 homestead exemption as the baseline. Seniors 65 and older can add another exemption on top, up to $50,000 more. Income limits apply, but they were recently raised, meaning more seniors qualify now than ever before. That's up to $100,000 of home value that's completely tax-free. Add in Florida's Save Our Homes provision, which caps annual assessment increases at 3%, plus portability rules that let you transfer up to $500,000 in savings when you move within Florida. Florida didn't just create exemptions, they built an entire ecosystem of property tax protection that follows you wherever you go in the state. Texas made headlines in 2023 with the biggest property tax cut in state history. Texas voters approved Proposition 4, which doubled the homestead exemption from $40,000 to $100,000. That's now the largest homestead exemption in America. For most Texas homeowners, that change alone saves over $1,000 annually. But seniors get even more protection. An additional $10,000 exemption stacks on top for those over 65, and school district taxes, which typically represent the biggest chunk of your property tax bill, freeze completely at age 65. Texas didn't just tinker around the edges, they fundamentally transformed property taxes for retirees. Illinois has some of the highest property taxes in America, but they also have programs specifically designed to shield seniors from those costs. The good news is they just expanded who qualifies. The Senior Citizens Assessment freeze locks your assessment at the value from when you first qualified, and the income limit just increased to $65,000. If you were making $55,000 or $60,000 and couldn't qualify before, you might be eligible now. Combined with the senior homestead exemption, qualifying Illinois seniors often see reductions of 30 to 50%. The critical warning here is that Illinois requires annual renewal. Miss your county's deadline and you lose the benefit for the entire year. Our next group of states went beyond just reducing property taxes. They created pathways to complete elimination. Alabama already has the fourth lowest property tax rates in America, but here's what makes it extraordinary for retirees. When you turn 65, the state portion of your property tax doesn't just decrease, it disappears entirely. There's no income limit, no complicated application process. You reach 65, you apply, and that portion of your bill vanishes forever. Since Alabama's overall rates were already among the lowest in the country, eliminating the state portion often leaves very little. A $100,000 home might carry property taxes under $400 annually. South Dakota made a change in 2024 that flew completely under the radar but could be game-changing for retirees. They removed the home value limit on their senior property tax elimination program. Previously, your home had to be worth less than a certain amount to qualify. Now any home, regardless of value, can potentially reach zero property taxes. Here's the secret most people miss about South Dakota. Yes, there are income limits, about $32,000 for singles and $40,000 for married couples. But here's the key, only 50% of your Social Security income counts toward that limit. Someone with $50,000 in total income might actually qualify because of how Social Security is calculated in the formula. Georgia made the most permanent change of any state by putting property tax protection directly into their constitution. In November 2024, Georgia voters approved a constitutional amendment that freezes property assessments at age 62, not 65. Since it's now part of the state constitution, no future legislature can vote it away or modify it. At 62, your property assessment locks in place forever. There's no income limit and no home value cap. Every Georgia homeowner who reaches 62 automatically qualifies. Then at 65, school tax exemptions kick in that can eliminate most or all of your remaining bill. Georgia's 159 counties each set their own exemptions, and some are extraordinarily generous. But Nebraska did something no other state in America has attempted. They're not just reducing property taxes or freezing them or exempting them. Nebraska actually refunds property taxes you've already paid, up to 100% in some cases. You pay your bill like normal, then file for a refund and the state sends you money back. For the lowest income brackets, that refund can be complete. Every dollar you paid in property taxes comes back as a check from the state. Your net property tax becomes zero, not because you didn't pay, but because Nebraska gave it all back. The critical deadline is June 30th every single year, and this is not automatic. You must file Form PTR or you get nothing. Most of these programs share one crucial characteristic that could cost you thousands. They're not automatic. The states won't find you, remind you, or send you money unless you specifically apply. Missing a deadline can mean waiting another full year or losing benefits permanently. Nebraska's refund deadline is June 30th annually with no exceptions. Georgia exemptions typically require application by April 1st, but check your specific county. Tennessee's freeze requires a one-time application that you must initiate. Texas homestead exemptions usually have an April 30th deadline. Illinois programs require annual renewal with deadlines that vary by county. Here's what you need to do immediately. First, determine if your state offers any of these programs. Second, research your specific county because local exemptions can vary dramatically and might include benefits not mentioned here. Third, find the exact deadlines for every program you might qualify for and mark them in your calendar today. Never assume any program is automatic, and for those requiring annual renewal, set reminders for next year's deadline before you forget. Property tax relief exists across America, but it only helps people who know about it, understand the requirements, and file applications on time. These 10 states represent the most significant property tax changes for retirees in recent history. From Indiana's constitutional protection to Nebraska's unprecedented refund program, the landscape of retirement property taxes is shifting dramatically. The question isn't whether relief exists, it's whether you'll take advantage of it before the deadlines pass you by. If you're planning retirement or currently dealing with rising property taxes, understanding these programs could save you thousands of dollars annually. The laws just changed, the deadlines are real, and the potential savings are substantial. Don't let unfamiliarity with these programs cost you money that could stay in your retirement account where it belongs.